What up and welcome to day 3 of the bootcamp. I hope you guys have a great day 1 and day 2 so far. But if you think I dropped some sauce in those previous videos, you have no idea how crazy this is going to get. So in today's video there's going to be a little bit of a rant as opposed to the previous 2 days. But just want to say I'm super proud of all of you staying up until day 3. We've still got a lot of days more to go. But I mean, I see the interactions. I see all of you guys just coping along, learning new things, just putting in the work. I hope you did your homework, by the way, but at the end of the day, you've got to stop and you've got to ask yourself, who are you doing this for? Are you doing this for your kids? Are you doing this for freedom? Are you doing it for your wife? What and who are you doing this for? At the end of the day, I did this for freedom so I can have more time with my wife and my son. And now also my baby girl as well. So it's at the very least, you need to understand that you're not doing this just for yourself. I mean, maybe there's a few people out there who's doing it for themselves, but sometime in your life you're going to find somebody who this is going to affect as well in a positive way. It's not only always going to be you. Maybe it might be a kid, it might be a friend that you're helping, maybe a parent, but you're at the top of the tree and then the branches flows down and then it's going to carry weight to the downside. So you need to understand that the time that you're putting in right now fulfills those branches, and it will most definitely help a lot of the people on the other side. So really just props to you, pat on the back to yourself. And by the way, just look at the new hoodie. Props to wifey for getting me the new black hoodie. I love the white hoodie as well, but the black one just slaps different in the dark mode, you know. I know it looks a little bit like a villain type of vibes. The white one gives more good guy vibes. I don't know. Maybe, just maybe we gotta put on a little Ready the Baddie here, but not today. So let's jump into the analysis. Now, with yesterday's video, we discussed that we're looking at the candlesticks and then the candlestick maturity, pretty basic stuff. And if you still don't get it, let me know in the comment section. I'll be more than happy to explain it to you. But at the very least, that is just to look at structure and then for your bias for the day. For example, just want to reiterate, if we test the high of the day, that doesn't necessarily mean there's going to be a trade, folks. Nothing is set in stone, okay? I'm giving you the tools. I'm showing you how to use it, but at the end of the day, it's you that's going to be using it. So at the top of the day, you might get a reversal. That reversal is not going to give you an entry criteria. You might give a break of structure and then the price might be coming down, or it might break the high of the day, come back down and then test it and then go up again. So there's a lot of scenarios that can play out. My goal here is to help you spot these scenarios and then be able to capitalize off from it. So in today's video, we're going to talk about something very, very interesting that I've been watching, been formulating over the years. And in the beginning, I mentioned the 3-day cycle. Now, it's not always going to be 3 days, but it's never going to be less than 3 days. I mean, I saw one time it happened over 7 days. So basically, this is like your blueprint to try and anticipate what the following day is going to show. It's your idea generation. Let's say you're on a Monday and you see this setup. You know that tomorrow you're going to sell your position or you're going to buy your position. So this gives you the edge. And I'm giving this to you so you'll be able to practice this, be able to use this. I mean, so many people in our academy is using this, and it really is just, it blows my mind the type of entry models that people create with this. So I'm giving this on to you. I'm passing on the torch. Definitely run with this and let me know what you guys think at the end of the day, because I'm doing this for you. So the pattern that I want to talk about today, by the way, I wanted to create a whole slideshow, want to make it nice. I want to add some nice flavor and touches for you guys. But I thought a practical explanation, me drawing on the charts, raw, real, would really just be the best way. I mean, I can create a slideshow if you guys want, but at the end of the day, I want you guys to feel as if we're looking at this right now and I'm explaining it to you right now. So the pattern that we're looking at today is, it's a 3-day pattern, okay? It happens over 3 days. So what you need to remember is, the first day, it's a setup. The second day, you can take trades. Okay, it's not to say that on the second day there will always be trades. You might get an inside day, or you might get a trade on the second day, but it won't be as explosive. So on the topic of being explosive, on the third day you will get an explosive move. So naturally we want to take trades on the third day. That's what we want. Okay, we want to take trades on the third day. Second day is fine, but it won't be as times 2, times 3 of the initial move that we want. On the fourth day, same thing, you can still take trades. Fifth day, this setup can continue running until it makes a move to the opposite side. So the setup I want to talk about today is called an FBR, false break reversal. Now this happens with, it goes hand in hand with what we talked about yesterday, with if the market has a high, it has a low, goes inside of the range and then comes back up, and then comes back down and closes below the high. So that's why I said it's so important for you guys to know your homework and do your homework, because then you know what I'm talking about today. We always want the high, we always want the low. Now if we get a fake out or a false break reversal, the market will break through and then it will come down, close below that range, and it will go in an anticipated direction. This was studied by our dearly beloved trader Larry Williams back in the day, I think back in the 60s or 70s. He introduced it with a few more concepts, but for today, let's focus with the false break reversal. It's when we have buyers lined up here, all the way pushing price up, and then all of a sudden there's a massive reversal. So the easiest way for you to spot these, in this video we're going to talk about how to handle these, but how you can spot these is exactly how I explained to you yesterday. You look at the false break reversal based off from candlestick maturity. So if I look on the 15-minute and I see the market breaking through, then on the 30-minute, I know that there's still one 15-minute candle left. You will see that it looked like this at first, but when the candle closed, you'll see it look like this. This is how you spot a false break reversal. Now, here are some key points that you need to remember. So for the people taking notes, now's your time to shine. False break reversal, always from the previous week high and low. I don't want you guys asking me about this week's high and low or 3 weeks ago's high and low. It needs to be the previous week's high and low. From Monday to Friday, you draw the weekly high, you draw the weekly low, and then you take it from there. So I don't want you to use the previous daily high, the previous daily low. It must always be the previous weekly high and low. Let me show you guys what I mean. So I'm on the H1 time frame. It's always easier to spot this on the H1 time frame. So now I can see it is today. It is Wednesday. Okay, the day before that is Tuesday. The day before that is obviously Friday, right? Just kidding, it's Monday. So it's Monday, Tuesday, Wednesday, Thursday, Friday. If you guys don't know that, then yeah, we need to have another discussion. But anyways, we can see that Monday, Tuesday, Wednesday was a bearish movement. But before that, the market created some highs and lows. So we can see on Thursday, the high was printed from the previous week. So now I want to see, I'm looking at the dates here at the bottom. So now I want to see Monday's low. Okay, so Monday's low has been created. So already you can spot that we're inside last week's high and low. So what is this telling us? The market is ranging on the higher time frame. And remember this quote, write it down, tattoo it on your forehead, put it up against your wall. But if we hit a higher time frame support and resistance and we break it, we trigger higher time frame traders. So what that means is if we break a higher time frame, like previous daily high, previous weekly low, previous daily low, we trigger other time frame traders, swing traders, investors, hedge funds, they get triggered for the long game. Of course, you want to get inside of that movement. As of now, there's no breaking of the previous weekly high and low. So we're into intraday movements at this moment. Now, what we want to try and understand is when the bigger players, they trigger those levels, they broke above those levels, and then they push price back down. That is very interesting because why did they break it in the first place? And then also, why did they push it back down? So when they break it, they wanted to trigger other time frame traders, maybe grabbing some aggressive buyers, buy limits at the top, sell limits at the bottom, and then they just wanted to reverse price, maybe just liquidating those traders, unfortunately, but that's not one of you guys. We are professional traders. But at the end of the day, we need to understand where's the high and where's the low. That's our first thing. So I'm literally running through the charts and I'm scanning where the high and the low is. Let's go to GU because I know Euro USD has been an absolute train wreck. Okay, so this is Tuesday, this is Monday. Let's draw our vertical line right here. And then let's draw another vertical line Monday, Tuesday, Wednesday, Thursday, Friday. Let's draw another vertical line here. So this is week 1. And then this is the previous week. So right now, I want to see previous weekly high, previous weekly low. Okay, this is on GU. Now, I've got the previous weekly high because it's from Monday, Tuesday, Wednesday, Thursday, Friday. Now listen, I know I'm repeating myself a lot. It's just so that everyone is on the same page, so just bear with me. Then the week after that, we have Monday, Tuesday, Wednesday, Thursday, Friday. And here's the thing. A false break reversal can happen on any day of the next week. It can happen on a Friday, it can happen on a Thursday, it can happen on a Wednesday, it can happen on a Tuesday, it can happen on a Monday, literally any day. So what we want to see is, we saw that our high was created. Now the second thing that we want to see, the first thing is the high and the low. What's the second thing? The second thing is we want to see the 15-minute time frame break, close above the previous weekly high, and in the same day, come back down and close below that high. That's what we want. I'm going to repeat it. 15-minute time frame, break and close above, and in the same day, come down and close below that high. So that's exactly what we got. On the 15-minute, look, we had a high, we came here, we saw the 15-minute, this is a close right here. What happened then? We closed below the high on that day. Okay, we closed below the high. So this means that we have a false break reversal. Now, what happens with a false break reversal? We have our false break reversal day 1, false break reversal day 2, false break reversal day 3. Pretty simple, right? Here's where the magic happens. So false break reversal day 1, obviously we're not going to trade, folks, because we have to wait for the closure of the day, and when we see it's a false break reversal, we know tomorrow it's game time. Remember, I said you can trade on a day 2, you can trade on a day 3, you can trade on any day, as long as it's not an opposing day. So if I have a false break reversal, let's say Monday, and the trade goes in my favor, if I see another false break reversal on Wednesday pushing price up, I'm going to disregard my previous false break reversal because now we're in a new cycle. We're now in a 1, 2, 3 day pattern. So we saw false break reversal day 1 created. This is our setup day, folks. This is our setup day. Day 2, what did I say about a day 2? We can take trades on a day 2. But let's have a look at our low of the day 1. We broke it. That's good news. And then our high of the day 1, we did not break it. So what does that mean? Of course, we're going to sell. Look at this big sell-off. I mean, just look at this. I already know that some of you are probably going to ask me, yo, MC, what about day 3? I want you to pause this video right now and tell me what you see based off from day 2. Pause this video here just for like 2 minutes and tell me what you see based off from what I said on day 2. I'm going to let you in on a little secret, don't worry. So day 3, we saw an inside day. Remember what I said, folks. The high and the low is super important. So we can see that we're still inside the previous day. That's an inside day. That doesn't count. That's not your day 3. So what we want to do is we want to remove this, and we see we have an inside day. Okay, this is a perfect scenario right here because we can see we broke above the following day. So we have our inside day. We broke above on the inside day. So what does that mean? What does that mean when we break and close above on the 15-minute time frame? That does not mean we have another false break reversal. Remember, we're at our daily count right now. We're looking at our daily high and lows, not our weekly highs and lows. So when the market breaks the opposite side, remember we want to look for sells, folks. Just stick with me here. We want to look for sells. So the minute the market breaks above, what happens? It's a break of structure, family. We cannot regard this as a false break reversal cycle anymore. We cannot regard it as that because we had the market coming down, pushing down, and the minute it breaks and closes above that high, we disregard a false break reversal. Now, if you're going to ask me questions like, yo, MC, but we missed out on this big move. Wait until tomorrow. I've got a big old secret for you again. If you thought this one is amazing, it just gets better over time. It's like every single day, it's adding pieces of the puzzle together. So this, you would have been able to quote this trade on another setup I like to call a red setup day. So there's 3 days. We have a false break reversal. Tomorrow we're doing the red setup day. The day after that we're doing a green setup day. So at the very least, let's say it did not break this high, because you can always check on the 30-minute to confirm, but it closed above on the 30-minute as well. So this is definitely broken, okay? Now let me just draw this high. The market came back down, broke the low again. So this is a continuation move of a day 3. What happens after day 3? Remember what I said. I'm going to say this the whole time. Remember what I said. I always say, remember, draw your highs, draw the lows, and look for false break reversals. What happened during London session on a GBP-based pair? Can anybody tell me what they see right over here? Let's go to the 30-minute just to confirm. I mean, folks, it doesn't get any better than this. And if you're here scratching your head, you don't know what you're looking at, let me explain it to you. So the 15-minute Asia session created the high. Remember I said the Asia session high and low needs to be broken first and confirmed, but be careful of candlestick maturity. So candlestick maturity is on the 15-minute if you see the candle breaking above, but the 30-minute comes back down and creates one beautiful rejection candle. That is not a broken level. That is why I looked at the 30-minute when we came over here. This is not the same scenario because we definitely broke it. Now, on the 30-minute at this Asia session high, that was not a break. It was just a reversal. We have 1, 2, 3 candles. This candle breaking that, I don't know what you want to call it, rejection candle, falling star, whatever it is. We filled it with a bearish engulfing, and now just look at this move. Just look right there. Can you see how easy it becomes when you just wait patiently for your move? Asia session high, Asia session low, previous weekly high, previous weekly low, previous daily high, previous daily low. Now let's say you did not want to take that trade and you wanted to wait, because I said let's test the high and then let's wait for a continuation move. Then I'm going to introduce you all to a good old concept I like to call the equilibrium. Now once the equilibrium has been broken, then we can take ourselves as well. 1 bar stop with a take profit at the next exhaustion zone. So this is just a little sneak peek of what's to come with the equilibrium, exhaustion zones, green setup day, red setup day, but it all comes down to, oh my goodness, we're just testing this level again. But it all comes down to you putting the pieces together and understanding your daily bias first. That's where we are in the bootcamp right now, folks. We want to understand false break reversal, green setup day, red setup day, Asia session high, Asia session low. That is important. Asia session high, Asia session low, previous weekly high, previous weekly low. Let me run you through another example. Here's a good example of when it did not play out. I want to give you another variation. So, what's the first thing I do when I come to the charts? We look at from Friday to Monday, right? We want to look at that. We want to look from Monday to Friday. We want to look at the high, and then we want to look at the low. Now, the following week, let's draw our highs. Let's draw our lows. Now, remember, in trading, the market will fall a lot better than it will rise. The market will fall a lot quicker than it will rise. That's just how the world works. So, let me just correct this high. Here's a very, very good example of when it gets executed the following day. So now we can see that we have our high and our low. Now what happened on the Monday? The Monday we broke above and we closed. I mean, this is 100% a close. What happened when we came down? Did we break back inside of this range? Is it a false break reversal? No, it's not. So what happened then? The following day we came back above the range again, we came down, and then we finally closed below. So that means that the Tuesday is your false break reversal day one. The day that it closed back inside of the range, that is your day one. Because I know I'm going to get questions, yo MC, what if it closed on the Wednesday? As long as it does not break the previous daily high. So if we broke this daily high right over here, it would have disregarded our setup completely. But we stayed inside of the range. It's not an inside day because we broke this low right here. So we came back down. We did not break the high. And now this is our false break reversal day one. Super important, super easy. What happens on day two? We get a sell-off. False break reversal day two. What happens on day three? This is so beautiful, guys. What happens on a day two? Remember what I always say. Asia high, Asia low. Let's just go to the 30-minute to confirm. The H1. Okay. So at this point, just want to reiterate, we have our break above, and then the following day we got a breakdown low. No candles obstructed, nothing of that order. Then we got our exhaustion zone. I know I'm talking a lot about exhaustion zones, but we're gonna have a separate lesson precisely for that. We have a test of an exhaustion zone. This is just how important candlestick maturity is. On a 15-minute, it looks like nothing happened. Look here. The 15-minute, it looked like it was just 3 ordinary candles, but on the H1 it created our very own exhaustion zone. This still acted as the high of Asia session. The market came back above on Asia session. What I would typically do in a scenario like this, and I hope I'm not jumping the gun, I'm just enjoying the flow. We saw that we rejected this exhaustion area right here. Let's go down to the 15-minute. And I can see we have a break of structure with a bearish engulfing, entry right here, one candle stop. Where do you place your take profit? Take profit. You can place your first take profit at the Asia session, maybe at the previous daily low if there is one, but you can dabble around with it, maybe at an exhaustion area, equilibrium, our baseline. There's a lot of other situations that we look at, maybe a structure break to the top side. It's all up to you. Now, what happens on a day 3? Do you think this was a coincidence, this push back down to the downside? Now, it might look like fundamentals, but there's a reason why this happened. And remember what I say. I'm going to say this a lot. I'm going to sound like a soundboard on repeat. We have our low of the false break reversal day 2. What happened the minute it broke that, folks? A ×2 move to the downside. So we have our consolidation for the end of the day. The market then immediately broke that at the 1 a.m. candle my time, and then it just pushed the price back down. Now you're probably going to ask me, hey MC, but what happened? It pushed to the top side. Now this is where other time frame traders come in. We tested our exhaustion area here once again. I cannot not talk about exhaustion areas. It's probably like one of my favorite tools. We have an exhaustion area here. What happened? It was tested, folks. Tested again, and then it gave us our pattern that we're looking for with exhaustion area. So it's constant patterns within patterns, variations within variations, setups with setups. And we're going to go through most of them in this bootcamp. You just need to understand how you put the pieces of the puzzle together. Now let me just draw it out for the people who might still not get this. We have the high and we have the low. So this is your previous weekly high. This is your previous weekly low. Okay, and then the market moved around in here. But then here comes our, let's just do this. Monday, Tuesday, Wednesday, Thursday. Friday is there. He just skipped school. Okay, so let's just put Friday in there before he feels neglected. So Friday is there. Hello Friday, welcome to the party. We got Friday there as well. So we got Monday, Tuesday, Wednesday, Thursday, and then Friday. Okay, so at this point we want to see the market coming down, coming up, staying inside of the range. Let's do an opposite variation. And what I want to draw out is that this can happen literally on any day. So on the Wednesday, bam, came back down and then closed back inside of our range. What does this mean? This is our day one. This is the setup day. This is our setup day. So on day two, as long as it does not break the previous daily low, we want to see a continuation move to the top side. Let's stop right here. Okay. In the first video, we spoke about a trend. This right here is a trend within a trend. So it's the higher time frame candlesticks creating your high and your low. Higher time frame candlesticks. Okay, just picture this with my mind. Okay, just try and stay with me. We got the previous weekly high and low. The following week, it's just one candle with the weekly time frame. It will hit that low. It will give a wick to the downside outside of that range, and then it will just push back up. That's how candles flip. That's how candlestick maturities play part. You might see on the H1 or the H4, it closed outside of the weekly low, and then people will think, oh, gold is going to sell. Gold is going to sell. My friend, I have news for you. It just went up, gave a reversal, and I caught your stop loss. I was at the buy side of your stop loss. That's pretty easy and that's pretty straightforward. I don't want to cut no bullshit with you. So day two, we want to take those buys and we want to stay with the trend. So we want to catch all of these buys at the break of that continuation of that move. So day two and then your day three. So the market then came down. Once again, as long as it does not close the previous weekly low. The small boys, their stop loss is there. The small kids, their stop loss might be there. But with the big kids, we want to play inside of the range of the bigger guys. That's what we want, okay? That's what the Mad Gang does. It's just how life is, I guess. So the day three continuation move, you can perhaps buy off the break from the London high, you can buy off the equilibrium, you can buy off an exhaustion area. We're going to get into the finer details of when you can pull the actual trigger, but for now, it's just to understand the overall trend. And then vice versa, if you get a false break reversal to the top side, the market will push to the downside and you want to get in on that trade. So folks, it's that time again. Your homework for today is to get your favorite setup, spot a false break reversal for a sell, spot a false break reversal for a buy, and then comment down below your favorite pair and then the date that this happened. I'm going to keep you accountable. I'm going to watch on the date that you saw this, and I'm going to say yay or nay, you messed up, go and do your homework again. But that's it for today, folks. I hope you guys enjoyed this video. I'll see you tomorrow.